Alright, how's it going, fellow traders? Magic Trader here. This is the CFTC report for the data that was recorded on January 5th, 2021. Let's start by taking a look at what the institutions have been doing with gold. So, gold. We see price dropped significantly here on the weekly chart. As that took place, look what the institutions did. They took major profits on long positions from 349,000 down to 313,000. This is significant. If we take a look at shorts, we can see that they also closed some shorts from 70 to 66,000. Bottom line is long exposure dropped by 1% from 82 to from 83 to 82,000. We take a look at net positions, they also dropped from 279,000 to 246. So basically we can see there was profit taking here, and now profit taking place one last time. The bottom line is we do have the trends to the upside and we do have major demand in play, so we are expecting over the longer term for price to continue higher. Let's take a look at oil. Look at that. Oil is rallying up just like we have forecasted for multiple months now. Alright? We said there was going to be a reaction from this area to the downside. It was going to be short-lived and then price was going to rally upwards. And that's exactly what took place. Okay, so now let's take a look at what they're doing with their positions. We can see that they increased longs from 684,000 to 692,000, and they decreased their shorts just slightly. Bottom line is they're still very bullish. We are expecting more upside. We've detailed this in the observation journals. We also detailed where we expect price to reverse from and head lower. We will be taking advantage of the move to the downside that we are expecting, and we will be opening up short trades when that takes place. But as for now, price is moving exactly as we forecasted, and we are still expecting more upside. Next we got the dollar. Let's see what's going on here. It paused before a rally. Alright, so as it paused before it rallied, what do we see with long positions? They reduced them from 14 to 13K. Longs are still cooled off. Okay, you look at that column, they're still cooled off with the long positions. We look at shorts, they were at 29,000. They dropped them down to 27,000. So shorts, they closed them for some profits down at these lows. Why? Because price is now entering into demand. So perfect place to close off short positions is right before demand gets contacted, before a push to the upside. But overall, if you take a look at here, we can see that they are aggressively bearish. And if we look at the sentiment here, we can also see that they're bearish. So we are expecting more downside on this one after a slight rally to the upside. Next, we got the Aussie. Aussie's hitting some supply. They took profits on short positions from 63 to 54, and they also increased longs as price was rallying up here. Now, you see the move to the downside. There's potential for this to move even further down, and what I will point out to you is, look, slightly bearish, not so much right now, okay, and a shift into bullishness. This can continue, or it's just going to die down, because after this big move they created this bullishness. That's why price moved up, but this can turn on any moment, so we'll be watching for that and taking advantage of that when it happens. US CAD, we've been saying since up here that price was going to drop, and look, that trade worked out to perfection. Okay, the short stop loss target down here worked out to perfection. Now we got some demand coming into play. Longs are very cooled off, so they're not focused on longs. Shorts is what they're focusing on. Look at the coloration here. Look at the net positions. This has room to drop. We will be taking advantage of this drop when the time is right, and we'll be posting it within the school forum. US Swiss franc, longs are cooled off. Shorts are aggressive, just like all the other dollar pairs, right? Bearish, bearish, bearish. We are expecting more downside on this one as well. We're waiting for a small little rally, and then we can take advantage of the move to the downside. Euro hitting supply. What did they do with longs? They added some longs, 224 to 228. They closed off some shorts. This is beautiful. Why? Because if price was going to continue higher, we'd need to see the bullishness continue. 76%, they rallied up there. They increased their long exposure from 73 to 76%. Net positions clearly bullish. This one's going to continue higher after a slight drop. This is exactly what we've been talking about in the school. Pound increase in longs, good sign. Why? Because supply has been removed. That opens up the doorway for a move higher. Shorts are cooled off. We see bullishness here. We see bullishness here. Clear sign for a move higher. US dollar, Japanese yen, clear sign for a move lower, just like all the other dollar pairs. Look at longs, cooled off. Look at this. Bearish. Look at this. Bearish. We've got demand in play. That's why we're seeing a slight move to the upside, but over the long term, we are expecting more downside. Kiwi. Look at that. They went their shorts into neutral, okay, into cooled off territory. Look at that. Long exposure continues higher, 65 to 70%. That's quite a significant increase. And take a look. Okay, net positions getting a little bit more aggressive to the bullish side. We've contacted supply, so longs have to be very careful because supply is now in play. We could see a bigger drop. All right, more information for members only, but I hope you enjoyed this one. That was your CFTC report for January 5th, 2021. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks and have a great week.